Hello and welcome to TechCircle. Today we are joined by Suhail Ghai, Chief Technology Officer of Max Life Insurance. Hi Suhail, thank you for joining us. We'll start with how life insurance business has been overall during the pandemic and how exactly Max Life has performed.
I think even during the pandemic, the life insurance business is growing. We had a very healthy double-digit growth in the last 2 months over the last financial year. There is an inherent undercurrent of consumer demand, which is reflecting in the search intents on the web for the life insurance. We also see that we've been working very closely with our business teams to develop our digital capabilities. I think over the last year and a half, today more than almost 99% of our policies are digitally sourced. And there has been a predominant shift in the consumer's way where they are interacting with the insurance brands. The servicing, which was earlier only around 40% digital, has now become almost 70% plus transactions with the customers are digital in nature. And therefore, I think where we see this business going, I think it's a good rub-off on this business. And obviously, consumers are lapping to the digital interactions.
Already, most of the life insurance companies we have been in talks with. Before pandemic, anyway, they were digitizing. So what changed just at the height of pandemic?
I think as you are absolutely right, the insurance companies were digitizing. I think it's just one thing which has changed. One is the consumer pull. We are seeing far larger pull of the consumer. Consumers are far more, both consumers as well as the sellers are far more open now of. That's why I give you an example that the digital transactions itself has gone up from 40% to 70%. That's a big change. Similarly, many more sellers are now open, and even customers are open for the initial, even the purchase transaction to be happened remotely or through digital means. I think that is the one big difference. And linked to this difference is that most companies are recognizing the fact that you need to accelerate digitization at a very fast pace. And therefore, that has led to further speeding up of digitization efforts.
And any sort of new technologies that you guys are working on?
I think that at Max Life, digital transformation is one of our key pillars as we keep on reinventing ourselves and becoming more relevant for our customers. And therefore, we are working on multiple technologies. On one side, we are modernizing our entire technology footprint, foundations to take it to cloud. So today we are moving our entire infrastructure to cloud. We are also investing in as people are working from home, we're investing in new collaboration tools and technologies for people to work efficiently remotely. And also we're investing a lot in security, especially around endpoint security and about threat monitoring to make sure that that the consumer data which we are holding is always safe. In terms of our front-end business thing, we are trying to remove frictions frictions in our onboarding journeys by leveraging more and more surrogates, financial information, so that we don't have to ask people about so many documents. Similarly, we are also looking at how we're using intelligence, AI, ML, and technology like OCR to remove or reduce the number of documents by customer, to reduce data entry by the sellers and this thing. And lastly, we're also looking at technologies like computer vision, based on which we can directly read documents. We're looking at technologies like speech analytics, so that we can understand what the customer is facing, customer sentiment, and therefore a host of other such things. The whole idea is how can we be more relevant to the consumer, and how can we remove the friction in their journeys.
Of the number of policies issues, how many of them were automated?
So first of all, as I told you that during this pandemic, we have today moved to almost 100%, I think 99% plus of all our policies are digitized, right? It's no longer a manual policy. And the other big thing which we are doing is that at least half of our policies, especially in the retail business, not the protection, but the retail business today are auto underwritten. That means there is no manual underwriting. We are even doing very well in certain cohorts, like in certain bank partnerships. More than 45% of our policies are, instant issuance. I think the policy is issued a certification of issuance is issued within few minutes of the policy. So as you're saying, we are already reaching this number in various cohorts between 35 to 50% on our non-protection business. Now we aim over the next 3 years to take on auto underwriting to almost 80 to 85% of our entire retail policy base.
Does that obviously increase risk also, the automated policies?
I think this is the most important thing. How do you balance customer convenience and risk? So while we are doing these things, we are not taking additional risk. Rather, our entire investments in creating an AI works team. It's a team of data scientists who are constantly working in creating models based on a person's earlier transactions with the customer, his profile. So are we able to sharply run these models upfront when a policy is being, customer is filling the proposal form, so that we can, cover all our mortality risk and make sure that, when we issue a policy, on one hand, it is without taking additional risk. At the same point of time, it is convenient to the customer.
And any new products that were also launched considering the boost in demand in policies since last year?
We constantly look at our portfolio. We benchmark. We come out with industry-leading product. We launched a Smart Wealth plan, which was a traditional plan last year, which obviously also had variants which gave guaranteed returns to people in the times of pandemic. Similarly, we launched a new protection product earlier this year, which was again supposed to be industry-leading projects. So I think over a period of time, we've been constantly looking at our portfolio, looking at what a consumer needs and benchmarking to them. Also, we did additional riders like a COVID rider during these times, so that to give additional protection to our policyholders.
What are the different digitization techniques that you adopted, and how has that been helpful during the pandemic?
Techniques, as I get it, one digitization technique is where you're using artificial intelligence to remove the need for people to give you more documents and a lengthy underwriting process. The other technique which we are applying is more and more on the user experience side. How can we create a user experience so well that we can probably in a 3-click journey, you're able to do the entire transaction. We're investing a lot in the UX area. Also, what we are doing is deeper partnership with banks, with ecosystems. We are trying to reduce the data entry or the customer details which the customer needs to provide, because we already have the details from other sources once the customer consents to it. So the idea is there to use ecosystem, to use artificial intelligence, and to use automation to digitize the entire end-to-end chain.
Will you also be able to share how much of investment has gone into the digital transformation of the company, and if you guys are already seeing returns from them?
While I can't share the exact numbers, but all I can tell you is that we were always investing on the digital transformation. The investments have only gone up; they haven't gone down in the last 2 years. Yes, we are seeing the early returns. As I told you, our NPS, Net Promoter Score, has moved up. Our customers are using much more digital means. One example is now over 70% of transactions are digital. We are also seeing much more interaction of customers with our other digital assets like bots and WhatsApp. A combined transaction has gone over 1 lakh a month, right? And what we also see is our ability to drastically cut down our turnaround times for customer requests by putting in automation, by digitizing the entire end-to-end. So I think all this is visible across various cohorts for new business, for servicing, tax, and even the customer load, number of clicks of the customer, and the feedback of the customer through an NPS. So it's all visible all around.